Despite a languishing lira and following charged government rhetoric against increase in lending costs, Turkey's central bank left its benchmark policy rate on hold at 4.5%, sending the currency to fresh record lows. Joining me down the line to try and decipher the decision is Wolf-Fabian Hungerland. Fabian, there certainly are reasons for a rate hike, yet still the majority of analysts expected no action from the central bank, with Barclays saying by having to contend with a crashing currency and political pressure to keep rates where they are, central bankers are caught between a rock and a hard place. Is this a fair comment?
Well, first of all, we have to understand that the CBRT is under heavy political pressure for two reasons. First, higher interest rates and thus higher borrowing costs could threaten the fundament of the AKP's electoral success, economic growth. And this year, two important elections are to come, so Erdogan doesn't want to threaten this. Second, Erdogan and his followers or fellows do seem to believe in the existence of some foreign interest rate lobby, which makes them even more hostile to higher rates. Given this, I certainly see how limited the central bankers' options were. But I think that the central bankers were also in the position to raise rates at least minimally. First, they are also under severe economic pressure. Inflation is above target, and the current account deficit isn't really narrowing, and it's financed extremely short term. Plus, using reserves to stabilize the currency appear to not work really since summer, and reserves are limited anyway. And second, as we have seen since summer, when tapering concerns plus the anti-government protests unfolded, some mild rate hikes were possible as well. And we have seen in the following quarters GDP growth even accelerated. So we would have expected some rate hike, which would have signaled that the CBRT is willing, even if not fully able, to take action against the current developments. We believe, to be more concrete, that some rate hike of 50 basis points or so would have been politically digestible. But obviously, the CBRT thought differently.
The bank did say it would allow the interbank rate to increase to 9% on exceptional days from 7.75%, receiving criticism for essentially hiking without hiking. The move has been described as only grudging tightening and an indication the central bank is not prepared to tighten on a sustained and serious basis. Is this a token gesture?
Well, first of all, exceptional means that it's basically free at hand of the CBRT, so they are really free to raise these rates whenever they want to. So it's on a daily basis, though that gives them a lot of flexibility. And what does it mean? Is it a token gesture? Well, viewed from the CBRT's perspective, this was a classic CBRT gesture. The central bankers love their tool of additional tightening because it's so flexible, and they used it happily since summer. They view this tool as effective, if you look at their research, in their admittedly very complicated monetary policy framework. So looking at this from their perspective, it was not a token gesture at all. But viewed from the outside, things are obviously, or not obviously, but they are actually more unclear. As we've seen since summer, the additional tightening hasn't done much to stabilize the lira. One would have expected that also central bankers should have noted that and should have taken more clearer steps. But as mentioned a minute ago, the CBRT is under heavy political pressure, and thus they have to package their tightening in politically digestible pieces, and apparently very, very small ones. So in sum, I think this wasn't just a token gesture, but rather a sign of how much the CBRT is under pressure while doing its job, and unfortunately, generally a sign that things go in the wrong direction at the moment.
On the eve of the decision, Erdogan, who has railed against the interest rates, played down the turbulence in Turkey's financial markets, describing outflows in recent weeks as trifling. He said there is no reason for inflation to remain high, but some experts believe the central bank is out of touch with market concerns and unemployment will rise. Which side of the economic fence do you sit on?
I wish I would be able to sit elsewhere, but I do believe to some extent that, measured by its action, the CBRT definitely underscores the current deterioration of inflation and of economic activity on the FX side. So I actually am thinking that the CBRT is should do more, but however, it is not necessarily the central bankers themselves which do not understand the severity of the situation, but it's the growing political pressure on this institution which is driving monetary policy ever more, in my view. So we have to differentiate between what the central bank understands and what the central bank actually does. But however, what matters for markets is obviously what they do. So the bottom line here is clear. Market participants are losing ever more confidence in Turkey unless no clear return to widely understandable and effective monetary policy comes, and the political environment remains so unpredictable. So basically, economic activity will suffer, and thus, of course, also the labour market.
Immediately after the central bank's announcement, the lira was, quote, massacred against the euro. Looking down the line, what's next for the Turkish lira and the economy as a whole?
Yeah, let me split my answer into 3 time horizons. In the short run, the lira will remain under severe downward pressure. We have seen that the CBRT is reluctant to intervene more substantially, so it leaves it basically to market sentiment, at least to the next rate-setting meeting in February. Note that the market sentiment is quite bearish, and it will stay very risk-averse, at least until summer, when some more clear picture about the political future of Turkey emerges. And with the lira under pressure, also capital flow volatility will increase, and potentially we might see some stark capital outflows. Yet, we do not believe that a sudden stop of flows will materialize. In the medium run, more expensive imports will let inflation rise further, the so-called exchange rate pass-through. Also, worries about the CBRT independence will increase as long as the central bank doesn't come up with some more clear action. And we also see that consumption will take a toll. Consumer sentiment already deteriorated and thus might hamper economic growth as well. Looking at the long run, an increasing power concentration in the judiciary might threaten not only EU accession, but in general also business friendliness, and therefore weaken the ability of Turkey to attract more long-term investment.
Fabian, great to talk to you. Thank you so much for your time and perspective today. Well, viewers, that's all from me for the moment, but tomorrow I'll be back with the latest on the UK unemployment picture and sterling, so please do tune in for that. Goodbye for now.